We are officially approaching the end of the fall market. If you follow me through this channel in the past, you might already know the real estate market of the entire GTA was not looking great. If you'd like to learn more about what's going on and moving forward to the winter season, let's get to it right after this. Hey, welcome back to AV Team Real Estate channel. I'm Antonio, the local real estate agent in the GTA. If you have been enjoying the content that I put out every week, don't forget to like the video, and if you are not already, consider subscribing to the channel and hitting the notification bell. Or if you would like to chat with me about anything about real estate, don't hesitate to book a call with me using the first link in the description below. Since we just had the release of the official Toronto Real Estate Board October updates, let's take a look at it. Although I don't think comparing the sales from a year ago is accurate, this is what the Toronto Real Estate Board likes to do. For October, the sales that were reported were 4,646, and for the same month last year, it was 4,930. It is just a slight 5.8% down. However, don't forget that last year in October, it was also not a good market. The sales adjust about extremely badly. Before we dive into the numbers, I just wanted to clarify that this number from the Toronto Real Estate Board are included in all areas in the GTA. That include all of Durham, Toronto, York, Peel, Houghton, Dufferin County, and Simcoe County. Obviously, some local markets could look different depending on the local market. To give you a better perspective, let's take a look at the past 4 years. To start off, last year in 2022, it was the year that an interest rate hike was introduced. And to have a 5.8% down from last year, this can definitely tell you how quiet the market currently is. Taking a look at October 2021, which was a somewhat normal year, we see that there were 9,783 transactions. In the prior year of 2020, we all know by now what happened during that year. The historic year had a crazy price appreciation of over 30% in just 1 year. And as a result, a high transaction count of 10,563. As you can see, the difference in sales transaction is huge compared to now. And you can pretty much tell how bad the buyer's sentiments are. Normally, during the fall season, it is supposed to be the second highest season behind the spring. But not only is it down from last year, but it is recording the lowest transaction since, God knows, 2001. Next, we can take a look at the new listings. This is also a part where it has contributed to the quiet market thus far. We can see that last year in October, it was 10,433 and 14,397 this year. It is an increase of 38%, which is quite significant. The next category is active listings, and I think it is more important to track what properties are actively on the market than the new listing coming on. And this is a higher jump from 13,019 last year to 19,540, a whopping 50.01% jump. When there is more inventory on the market, this simply means the buyer have way more options to choose from. And when that happens, prices will experience more downward pressure. Let's put that into perspective and compare it to the past 4 years so that you can sense how inventory plays a part in prices and demand. It is more apparent when you see the new listing in 2021 at 11,740 and compared to the year in 2022 at 10,433. We actually see that the new listings have gone down, but not a significant difference. And lastly, although 2020 had the most new listing out of the past 4 years at 17,802, we should now take a look at the sales to new listing ratio. If you are not a nerd like me, let me try to simplify it to you. Basically, if you divide the sales by the new listing, if the number is 50%, then normally it is a balanced market. A higher ratio implies a seller's market, while a lower ratio implies a buyer's market. Currently, the sales to new listing ratio in October is only 4,646 out of 14,397 new listings, which give us a 32.28%. Obviously, that is a way below 50%, and this is technically a buyer's market. Compared to last year in 2022, although it is also a market with interest rate hike, it had slightly better sales in 4,930 out of 10,433 new listings. That is a 47.25%, and it is still better than this year at 32.28%, but still in the buyer's market territory. In 2021, when the market was somewhat normal with low interest, sales were much higher at 9,783, and new listing at 11,740, giving us 83.33%. That is a seller's market, which was way over 50%, and that was quite normal for the past decades when interest was low. If you remember during 2020 when the pandemic was, although we had the highest new listing at 17,802, we also had the most sales at 10,563, and that is a sales to new listing ratio of 59.33%, which is still sitting in the seller's market. In summary, we have seen a shift over the last 4 years from the seller's market to the buyer's market. I like to look at active listing rather than new listings, which I think is a better representation of the market. Active listings simply mean all listings that are actively on the market and could be listed prior to the month. Having said that, currently we have the highest active listings at 19,540, and paired that with the lowest sale at 4,646 out of the past 4 years, this is not looking great, and it is about 23.78%. Slightly better in 2022 at around 37.87%, which is not great either. During 2021, you can clearly see the market is extremely hot. The sale transactions were 9,783 and the active listing were only 7,750. Think about it. The active listings were less than the sales figure. We are clearly low in inventory, and this is when we saw the most bidding wars. As a result, we have a whopping 126% sales to active listing ratio. The prior year during the pandemic in 2020 was still in the seller's market with 61%, which is normal for the past decade. Now let's move on to the average prices. And sadly, for those who thought that because of the slow market, the average prices should have been down by a significant amount, unfortunately that is not the case, and in fact it went slightly up from last year, but not by a significant amount. It is currently at 1,125,928 in October 2023 and 1,087,590 in October 2022, a slight increase of 3.5%, which is basically saying almost the same. If we compare the average prices from 2020 until 2023, we really didn't drop much, and at the most we are closer to 2021 prices. However, do note that this is the average price that includes all the regions that I mentioned within the GTA. It does vary in different pockets of the area you are comparing to. With a record amount of low sales, we can further prove that the sellers are not letting go of the properties and causing the price to be this resilient. Could we see more prices drop in the next couple of months? I say possibly, but we are not expecting like 50% like most people think it would. From being actively on the market for most condo in the area that I'm working on, the prices are indeed lower, but mostly at the rate of 10% lower than the peak. Here is a tweet from Scott. This is a chart of the two main categories in the area of 416 for the month of inventory. They are condos and freehold properties. If you are not familiar with month of inventory, it simply means the number of months it would take to sell current inventories at the current rate of sales activity. For example, if the current month of inventory is 5.8, it means that it would take close to 6 months to sell all the current inventory at this time. Usually between 1 to 2 would be a seller's market, between 2 to 4 months are typically a balanced market, and finally 4 or higher would be considered a buyer's market. Starting May of this year, the Bank of Canada did hold the rate from March until June, and as a result, we had a price surge that peaked during May. Both condos and freehold were on the seller's market territory between 1 to 2 pretty much before July, but freehold definitely was doing better than the condo with the green line. That greatly affected the condo market after the rate hike in July for condos, but not as much for the freehold, but definitely shifted towards a balanced market. The condo market was sitting at about 2 and gradually moved up to about 3.7 in August, and for freehold it held up better, going from 1.6 in June to approximately 3 in August during the 2 months of rate hikes announced during June and July. The fall market was supposed to be better in most cases due to seasonality, and the Bank of Canada also decided to hold the rate, but that didn't help much, and the month of inventory rose again with the addition of many more listings to the market. It has reached its peak since a decade ago. The condo market reached 5.8 at the end of October. The freehold market is doing much better, which is relatively still on the balanced market. It dropped from 4 at the peak and is currently back down to 3.4. There were a lot fewer freehold listings on the market than condos, generally in the 416 area. As an active agent on the market, I can tell you the condo market is flooded with much more listings in the Toronto area. Many people are confused when we talk about GTA Toronto and that city of Toronto. I spoke about the GTA, which consists of the regions that I mentioned earlier, but the city of Toronto is basically the biggest part of the central area. The city of Toronto is also divided into 3 sections: the west, central, and east. So when we speak of 416, they are all sections within these 3 sections. And why do I say that Toronto has a much worse situation for condos and the month of inventory is quickly rising the most? The majority of pre-construction condos are primarily focused in Toronto, and more specifically in the section of C01 and C08, due to the proximity of all central hubs. If we take a look at this chart from urbanization, this is a chart on the share of Toronto condos used as rental by period of construction. When we speak of rental unit, most of the time we refer to investors, and the pre-construction market is heavily dominated by investors. As you can see, in 2011, the total stock was about 27%, and it is already at 39% in 2021. For newer pre-construction that was built in the past 5 years, it grew to 59%. This further proves that the majority of condo owners in Toronto are investors nowadays. And because of the high interest mortgage rate, we saw many selling their condos. As a result, a high number of listings show up and the month of inventory rose to 5.8. The problem here is that the investors' carrying cost is getting much worse and they were forced to sell it. The concern here is that this change in cash flow could represent a tipping point that causes investors to shorten their holding time and think twice about further investing. If investors aren't buying, developers aren't building. More purpose-built rental projects are needed, but we are a long way from being able to rely on rental units to drive construction in Toronto. And this was one of the reasons why the Bank of Canada had to stop the rate hike, and recently Tim McLean mentioned that they could begin cutting interest rate before inflation is all the way back to the target, which is 2. Canada has not slowed down the immigration rate, which alone is another topic on its own, but that simply means that demand will not be going away anytime soon. The supply side of things should be the primary focus, and if the interest rates are forcing the investor out, we could see that the interest rate should be a matter of concern. The ease of the interest rate in 2024 remains to be seen, but for the 2 consecutive months that the Bank of Canada has held the rate, it is a sign that they might consider it in the other direction. Obviously, there are far more topics we could dive into, but I will leave it for another video to talk about. Otherwise, this would be far too long. I hope I have explained the current state of the market in October and simplify it for you. If you find this video helpful, don't forget to like the video and consider subscribing to the channel. Also, comment down below if you have other opinions about the market, as I'm always curious to hear what you think. Anyway, I hope you have a wonderful day and I'll catch you in the next video.